So what we're doing today is we are talking about maximizing practice profitability, running an efficient practice, and managing time and billing. So again, just who is doing the talk, my name is McCosker. I'm a qualified financial advisor. I worked in banking for about 32 years, 25 of those at managerial level. I have been a legal account specialist since 1986. I have two companies. I have computerized bookkeeping systems which provide legal bookkeeping to various different solicitors. I'm a director of it, and I've also created Sol-Est Software, which is specifically for solicitors and estate agents who have exactly the same regulations as yourselves. And I have also represented solicitors at the Solicitors Accounts Regulations Committee. So at this stage, now that you know who you are talking to, I'm actually going to turn off my video and just concentrate on the slides. So first of all, when we consider solicitors, solicitors are really wearing three different hats. First of all, they have the hat where they have to report to the Law Society in relation to the way client accounts are managed. Then they have the hat where they're actually acting as solicitors, giving advice to clients. And thirdly, the hat that they're wearing is the hat of running a business. And the only reason that you should be in business, in my opinion, from we'll say an accounting end of it, is to make profit. If you're not there to make profit, then you shouldn't be there at all. You know, if you want to provide some sort of a social service, well and good, but don't say that you're in business, right? So whilst managing, every business must manage income and expenditure and keep a close eye on managing accounts. Solicitors have the added responsibility of fulfilling obligations to the Law Society in relation to the account regulations. Now, I've already had a topic on this about 2 weeks ago, and we'll be running this topic again in another couple of weeks' time. But for now, what I'm going to do is spend roughly about 5 minutes just running through these, because they're an extremely important part of your day-to-day business. So your accounting records obligations are to ensure that you have cash books to record transactions for all client and office separately. And also separate for the likes of controlled trusts and non-controlled trusts. And these cash books and records, if you have an accounting software, these will provide these cash books and records for you. If you're on a manual system, then unfortunately you have to provide these yourselves. And my advice would be that anybody that's on a manual system should seriously consider a software system. So you need to provide client and office controlled trusts, non-controlled trusts, and solvency arrangement ledgers. You should have records of all lodgements, transfers, and payments. A register of all bank accounts held detailing the bank, the branch, the account name, and the account number. You should have the original of all paid checks for the client account, and these should be held in numeric order. Don't just keep them in a bundle. Make sure that you have them in numeric order. You'll drive the auditors mad if you just have them in a bundle and they're not sorted. You should have a copy of all bank drafts retained on file. You should have a matter file containing all documents relating to the matter itself. You should have a copy of every bill of costs showing the breakdown of the fees and outlays as issued on each matter. And you should have a copy of each balancing statement and office balancing statement. And you should have a copy of each accountant report as it is sent to the Law Society. So you should retain these until such time as your next audit comes up. The importance of good record keeping is to ensure that you keep your client account postings up to date and regularly ensure the accuracy, so that when you consult your client's ledger, it will prevent errors from happening on the accounts. You should keep an office ledger up to date. You should do regular bank reconciliations to confirm the accuracy of the information that's been posted to your system. Once your bank accounts are reconciled, you should produce reports which will be needed for the Law Society inspections and also for your accountant for his report at the end of the financial year. You should do regular reconciliations to allow early identification of any errors. And if these things are identified early and corrected immediately, then the Law Society don't have a particular issue with them. So you should also have an up-to-date, accurate account system, which is reconciled within 2 months of your period end. And you should have accurate, balanced, and thorough accounting reports, which allows your accountant to do his report within 6 months of your financial year end. It's not fair to land the stuff on your accountant after 5 months and expect him to have it ready within a month. So how do good bookkeeping records help your business? Like, first of all, what they'll do is, in relation to your responsibility with the Law Society, and we're more or less through that part of the talk, and from now on, we'll be looking at profitability over practice. But the reason for good records is that you should be able to quickly pull up any overdrawn client ledger listings. You should be able to pull up any office accounts and credit, any checks outstanding for more than 6 months, and very importantly at the moment, any inactive or dormant ledger listings. The Law Society are really homing in on dormant accounts, and your software should have a system within the software of being able to pull up a list of dormant balances as at a specific date. So for example, if you pull it up as at the 31st of March 2020, then it's showing you any ledger cards that have not operated since that period of time. So these are ledgers that need to be looked at, and the Law Society are homing in on these. Then in relation to your business, you would have aged debtors report, you'll have unbilled disbursements listings, you'll have aged creditors listings, and you'll have a full client and office ledger summary to check for any unbilled fees. In relation to compliance itself, we would feel that what you should be doing is at least once a week, you should be sitting down with your bookkeeper for about a half an hour, and there should be a list of reports that you would look for your bookkeeper to have for you, and you should take a run through these and discuss these with your bookkeeper. If you're doing this on a regular basis, on a weekly basis, then you'll find that you'll be really on top of your system. We've already covered this in depth in our previous presentation on regulatory compliance, but we'll be running the course again, and we'll be notifying people of the course if you want to join it. And these courses are free. On the regulatory compliance, we're given 2 CPDRs. I haven't fully decided on this one yet. It could just be 1 CPDR, and we'll give you certificates for those. So, you know, you're covering CPD, but you're also getting a good basic background as to what you should be looking at within your business and within your practice to make sure that everything's okay. But also stress that the usefulness of reports is dependent upon the standard of postings to the system. So in other words, if you're posting absolute rubbish into your system, don't expect to get anything back out again apart from rubbish. Software systems do not sort rubbish. It just spews back out what you already put in. So manual reconciliations each month to verify the accuracy of inputted data is extremely important to any system, be it manual or computerized. Okay, so one of the first reports that I would be looking at is overdrawn client accounts, office accounts, and credit. All right. And when you look at the report, and these reports are actually taken from our software, Sol-Est, you should be able to get similar reports of your own software. If you can't get these reports off your own software, then you need to be sitting down with your software provider and telling them that this is what you require, and ask them to give you a time scale for when this will be produced. So, you know, these reports are very important. So I do my little magic trick here and get my laser here. So the first one is a ledger summary report, which gives you a list of the actual balances within the ledger summary, and it points out any accounts that, for example, that are overdrawn. So within this particular report here, we can see that there is disbursements, the disbursements listing. You have a listing of balances in the office account. So in other words, this is where there either is a bill of cost in the office account or money has been lodged to it and the bill has not been issued, which is the reason that these two balances here have a minus in front of them. This balance, the total office, is then total of your disbursement and your disbursement and your office, given an overall total. And then beside that, then you have a list of your client balances. We have a listing in euro and we have a listing in foreign as well, because up around the border areas here, there was an occasion when solicitors used to hold sterling on behalf of clients, although that is nearly kind of stopped now at this stage. Then you can run a list of client balances which are overdrawn. So we'll see here on this particular one, whenever we look at it, there's an overdrawn client balance here under the foreign bank. Okay. And then also you would have a list of aged debtors. So within the aged debtors, then again, you can still see the two accounts that are overdrawn here, because bills of costs have not been issued on the system. And if you had an auditor coming in from the Law Society, they would be looking at that and it would be going into their report. Your accountant, of course, would also be reporting on that at the end of the financial year, if that was the scenario. But again, what I would say is, don't be wild concerned. If these things happen, they happen. The main thing is, are you doing weekly meetings to make sure that you're pulling these up? And once you have pulled them up, have you done something about it immediately? If you can say, if that is proved by referring to your ledger card by the auditor, then there's no major issue with them. Dormant balances. Okay. So this is the report that we have on Sol-Est for dormant balances. So if you look at this particular report here, the date on the balances is the 31st of August 2020. So this is a list of ledger cards where there has been no transaction on the ledger cards since the 31st of August 2020, and there is still a balance in client account. These are ledger cards that you either need to pull the ledger card and find out why is it that the balance is there, or it may be a scenario that, for example, that this is an old probate and the money is lying there for specific reasons. But if you're doing this on a regular basis, what you will find is it only takes maybe 5 minutes to run through it, for the simple reason that you'll know the old accounts that are lying there, and you'll pick up very quickly any new ones that are in there that you feel that you need to look at. So the dormant balances can arise from situations such as slow-moving litigation cases, and in such cases, a quick look at the client's file can easily satisfy an auditor. As well, what I would say is, if you do happen to review a file, do put a note on the file so that the auditor can see that you've actually done the review. Like, don't just pick up the file, look at it and do nothing. Pick up the file and put a note inside in the file as to what it is that you have done, or that you have actually reviewed it. Some dormant balances can cause issues that need inspection. For example, they may indicate that fees have not been taken across, and if this is the case, take them across. The Law Society have become very strict at the moment on clients, on solicitors leaving their own money in client funds for longer than a 3-month period. And the thing that's at issue here is that if you do not take your fees across in time, then you're looking at a possibility of tax evasion, and tax evasion is an issue for money laundering. And the auditor coming in from the Law Society, or indeed your own auditor, has a responsibility under money laundering to report these issues to the revenue. So, whatever you do, stay on top of this. Don't leave it lying there for longer than 3 months, because if you do, this will cause you issues, take up a lot of time reporting back to the Law Society, or in the worst case scenario, that you would end up having an audit from the revenue, and whatever figure they come up with, you can multiply that by 3, because that's the amount you're going to have to end up paying them between penalties and interest. So this is just not worth it. If you have a lot of dormant balances that arise due to poor bookkeeping practices, then this is something you need to be aware of as well, and something you should be sitting down with your bookkeeper and seeing if they require further training. Also, if there are a lot of files with fees due to the office account that have not been taken across, then they'll be seen as well too. And as I say, this is tax evasion, so you need to be careful of it, because it will trigger a revenue audit on you. There was a situation a couple of years ago where revenue didn't bother too much about solicitors, because solicitors' accounts are quite complex, and not every accountant and every auditor fully understands them. So the revenue had shied away from them, but they'd done a massive exercise in Mayo over a 10-year period from about 1995 to 2005, and they fully understand solicitors' accounts at this stage, I can assure you. And when they come in, if they ask for a list of every single ledger card that you have in your system, you have to produce it for them. It's the law. Okay, so your financial management review then is something you should also be doing within your practice on a regular basis, because the practice is there for a number of reasons. I would say number one, it's there to make profit for yourself, to provide you with an income as well. First of all, I would say that it's there to provide you with an income. Secondly, it's there to provide profit for the business, because if you don't have retained profit in the business, then you're not going to be able to develop that business further out into the future. For example, maybe buying the likes of new software, buying the likes of case management system, putting in new equipment within your practice, staying up to date with your computers. And I go into lots of solicitors' offices and I see computers that are maybe anything up to about 10 years old sitting in there. My strong advice, a brand new computer at the moment is about €500 plus VAT. Go out and buy new ones. They're vastly different to the 10-year-old one. So if you have your system completely up to date, then the office manager or the practitioner is able to look at reports coming from your system, and they're able to understand exactly what's happening within the business, right? So what I'm going to do at the moment now is I'm going to outline a selection of some of the most important reports which you should make a habit of running regularly. Best practice would suggest you should be taking a half an hour per week to review these reports as well. And the example of the reports that I'm going to show you are an example from Sol-Est accounts, but the other softwares will produce very similar reports. They might look slightly different, but when you really analyze the information that's available on them, the information will be exactly the same. So your client ledger summary is the first one, right? So not only is it useful for checking compliance, this report will also help you to identify where outlays have been incurred by the office and funds are on hand in the client account to cover same. And we'll look at the report now in a second. You might also find that bills have been posted to a ledger, but the client to office transfer has been overlooked, although this may be simple oversight. Once it extends beyond 3 months, then it's actually a breach of regulations. So your client summary report should be something similar to what I have on screen at the moment. So similar to the report I spoke about earlier on, you have a listing here of the actual disbursements that you have paid out on behalf of the client that have not been billed yet to the office side of the ledger card. Then you have a list of the items that have been billed but have not been fully paid. Then you have a total of the disbursements in the office together. And then you have a list of the money held on client funds, either in euro or in foreign bank. So when you look at this report, the first thing that would click out to me is there's a particular client here where you have a disbursement paid out of 15,000 and you have 137,000 sitting on client account. And 15,000 is a substantial sum of money. So should be consideration given here to taking client funds across into office to pay those disbursements, even though it might be an interim bill because of the size of it, is something that certainly should be considered. And you should always keep in mind the value of disbursements that you have paid out on behalf of clients, because this is dead money, and the other issue with it is that if it lies there for a period of time, we'll say of 3 or 5 years, and you're not notifying the customer of it, then when the customer gets their bill, they don't realize that it's as big as it is, and they can end up in a bit of an argument in relation to what the final fees are going to be. Your long outstanding checks is also very important. Besides the fact that it can lead to compliance breaches, it may also be indicative of clerical errors. So you should keep an eye on it. So there could be long outstanding wages, drawings, or suppliers checks in there. If they are, then you should be thinking to yourself, well, look at why have wages checks or drawings not been cashed? And you need to write these back into your system. Uncashed office expenditure checks need to be verified as uncashed with your bank. And these can be reissued or written back at your discretion. The one thing I would say in relation to that is just make sure, if somebody rings you up and tells you that there's a check that hasn't been issued and They want a new check issued, just make sure that you check your uncashed checks to make sure that you don't have it already posted on your system. Identifying multiple long outstanding checks as posting errors may be indicative of poor posting practices. So it's just a matter of getting further training for your bookkeeper in relation to that particular issue. So this is a list of your long outstanding checks, and again, you pull the report at a specific date. We generally tend to pull the report every 3 months, even though the Law Society specifies 6 months. The reason the Law Society specifies 6 months is that according to banking regulations, a check that is more than 6 months old is out of date and therefore should not be negotiated. Having said that, with modern banking, or banking in the last 20 years, banks no longer check these things. So I have seen situations where checks that have been outstanding for a couple of years have actually been presented to the bank and paid. So just be careful that if you're dealing with old outstanding checks, that before you actually issue another check, that you either physically have the old check in your hand that you can cancel it, or that you have notified the bank that you want the check cancelled. And once you have notified them and signed your cancel check and paid your fee, of course, then it's the bank's responsibility to make sure that it's not paid in the future. So just be sure that you double check that they're not cashed. I also find some of the government departments like PRA and that can be a bit of a headache, although they don't take checks any longer, but they can be a bit of a headache, where you issue stuff to them and it's mislaid. Then you have your aged creditors, and after that we're going to get more or less into the meat of what your business is about. Your aged creditors is basically a listing of money that you owe to suppliers, and the main reason that you'll be having a quick look at this is to make sure, first of all, that you're paying your bills on time, and secondly, to make sure that there's no balances outstanding there where invoices haven't been issued. So you might find that there's large balances also owed to the likes of peers, and again, from good business management point of view, it's good to stay on top of these. So just keep an eye on the likes of your aged creditors. So this is actually the report here, right? So if I look at this report, the first thing I see is there's a particular balance at the very bottom for ProClean for a minus 150 euros 25 cents, and that would indicate to me that in this particular case, what has happened is the supplier has been paid, but the actual VAT invoice has not been posted to the system. So therefore, your VAT report is not going to be right within the system itself. You're not be claiming the VAT back on that particular invoice. So it's important that you look at these. And as I say, look at the fact that, if you have a lot of them sitting here in 90 days, it means that according to today's date, it is 90 days since you have paid any of these clients, or sorry, any of these suppliers. So, it's just important to stay on top of it. If you keep a nice, neat system in your practice, then your practice will run along very smoothly. Your VAT analysis, then you can get a VAT report off your system too. So when your bookkeeper has completed the posting for the VAT period and reconciled the banks, they should also balance the VAT return. And once reconciled, then the VAT analysis can be used to complete your VAT submission to the revenue. Or if you make fixed monthly payments, you can use this report to check that you're not underpaying or overpaying, thus affecting current or future cash flow. The other thing about it, of course, is that the revenue have regulations that if you're paying on a monthly basis, and at the end of the year, if it's discovered that you have underpaid by 20%, then there's a possibility that they can actually go back and look at your VAT return, and if they discover that you haven't paid at least 80% of the return, then they will actually apply penalties and interest. So just be careful of that. So this is your VAT return for the period. So the report should be split into two parts. One part should have your purchase invoices, and the second part should have your bills of cost. And you should also be able to run a bill of cost report. And when you would look at the balance of the bill of cost report, it should agree with this balance here within the VAT return. Or you can run a report on your purchase invoices. And again, that should balance with your purchase invoices totals here. And I would just caution, that just don't take your accounting software as being 100% accurate. Like, you know, within software development is quite a tricky business, and within it, you know, little glitches can happen, and stuff may not be balanced, because in a lot of cases, the people that are developing the software are not experts in the bookkeeping or accounting field, so they miss stuff, and just keep an eye that your figures are actually balanced. Okay, within your business itself, then you have a number of different reports which I feel you should be looking at. The first of these reports is the trial balance, and then your trial balance is actually broken down into your income and expenditure and your balance sheet. Okay, and the trial balance is a summary of all the debits and credits of the individual nominal codes, right? And the first thing you should do is you should check to make sure that it is actually balanced, and I'll show you that now in a second. I have seen a number of softwares out there where legal accounts packages are so poorly configured that the trial balance is not actually balanced. You know, the balance on the debit side doesn't equal the balance on the credit side. But the principle of bookkeeping or accounting is that for every debit, you must have an equal and corresponding credit. So on that basis, your debits and credits must balance. And if you find that you run a trial balance and it's not balanced, then I would be ringing my software provider, looking for an explanation as to why it has happened, and an assurance that it's certainly not going to happen for the future. So just be careful on your trial balance that you understand it and that it's providing what it should provide for you. So when you run the trial balance itself, this is roughly what you get. As I say, these reports are all reports coming off Sol-Est, our accounting software. Your own softwares, whatever software you're using, will provide a very similar report. The main message to get across here is that when you look at the total for the debits, it should agree with the total of the credits. Okay. And in our case, what we do is we keep the client money split from the income and expenditure within the trial balance itself. We just keep the client money separately. Other ones keep the client money inside in it. It's just a preference that different people have. It makes no difference. One's as good as the other. It just depends on what way you decide you want to put it, right? So you should check, first of all, if I was looking at a trial balance, I would check to make sure that you have all your nominal codes here. We use numeric codes. Some other softwares use alpha codes. Again, it makes no difference. Then you have a list of all the various different accounts. Make sure, first of all, that you don't have something posted in here where you might have a nominal code and no account description, or indeed an account description where you don't have any code. You know, there should be codes on them and there should be a description on them. And I would run down through it as well too to see if there's anything jumping off the page. For example, if you have a suspense account, which generally most people need to have, which should be cleared out every month, then just check to see that there's nothing there sitting in suspense that you need to have a look at. And I'll show you where you can go now to get a breakdown. Like, you know, that if you look here and you can see a fee income of 9,194.60, I'll actually show you how to get within that and see what that is broken down into, right? So from the trial balance, within the reports for the trial balance, you should also have a report for nominal details. So in here, this actually gives you a breakdown for the period of the individual items that makes up your trial balance. So when we seen the figure of 9,194.60 within our trial balance, which was for fee income, here in this report, we can actually get a breakdown of every single individual item within that. So if you wanted to get a look at your wages, you just go in and you get a look at your wages and see what the breakdown is. Okay, so it's useful to analyze the accounts a wee bit further. You know, just checking that expenses aren't misposted as drawings, or, you know, some of these figures, because again, you know, these things can be misposted by the operator using the system and not necessarily picked up by your accountant whenever they go to do their stuff. So it's just important to keep a wee eye on it just to make sure that everything's okay. So whenever you run this report for the same period as the trial balance, naturally the figures should balance. Again, if they don't balance, you need to be asking questions. Also within your system, actually, just come back to the trial balance here for a second. So, this section from here on in, as far as I'd be concerned, is confidential within your business. And these reports, depending on the way your software is set up, are available to anybody that decides to run them. Your software should have a mechanism to block these reports. Within our software, I can actually block the reports so that the likes of the trial balance, the balance sheet, and the income and expenditure, that nobody can see them apart from the principal, if that's what you want. It takes a wee bit of time to set it up, but at the same time, if you want that done, it should be something that you should be considering. And if you're not using Sol-Est, then you should be looking to see that your provider, whatever software provider you have, has that type of facility. Or if they don't have it, that at least they're going to make an effort to get it within a reasonable period of time, which mine should be 12 months. So the next one then we're coming to is the income and expenditure. So your income and expenditure shows your turnover, expenses, and your net surplus or deficit for the accounting period. And it's important to monitor the overall position in the practice to control budgets and cash flow. Our fees covering expenses, our income levels as expected for the number of solicitors in the practice, and I'll talk about this in a second, and which expenses are high and could be looked at. Okay, and for example, you should set parameters within your business. For example, is the level of wages in line with fee income of between 20 and 30%. So this is your income and expenditure. So this is coming from your trial balance. As I say, your trial balance is broken down into income and expenditure and then balance sheet and profit and loss. So in here, we can see the income. We can see the various different expenditures. Again, this is our style. Other people will have different styles, but it'll be the same net result. So at the end of it, whenever you take away all your expenses from your income, you're left with a healthy profit, in this case of 7,000. Okay. So it's a snapshot of your profitability at a given date, right? So you should check that your fee income is as expected for the levels and investigate any shortfall. And as practice owners and practice managers, it's important that you keep this in the back of your mind. You mightn't necessarily have it as a rigid control, but certainly keep it in the back of your mind that the income that you're getting is what you would expect for the effort that's put into your practice, and that the expenses that you have coming out of that practice are not far too onerous for the practice itself. In relation to income, I'm going to give you a couple of figures, and this will shock some people. But what I'd really like you to do over the weekend is at some stage reflect on these figures, because these figures, in my opinion, are extremely important. When we would look at time, and this is what you're selling your expertise as per a certain amount of time. So what we will be saying is, and when I read articles in relation to practice management, both you get very little articles actually in Ireland, but you see it in the UK and also in the US, right? A fee earner should aim to generate at least a fee income of 175,000 per annum, excluding that. And I explain the reason for that figure in a few minutes. All right. Your staffing level should be on average 2 admin staff per 3 fee earners. You should aim to keep your wages costs around about 20% of income, although this percentage may be higher if some staff members are also fee earners. And I just spend a wee bit of time on that. Don't get overly concerned if your wages costs are up at 30 or 35%. You have to take into consideration the level of experience of the staff that you have and what you're paying that staff and what those staff are actually generating for you. You can have very good secretaries in your office that would be getting 25 or 27,000 a year, but that person could actually be taking in an income themselves of 100 or 120,000. So just be mindful of that. But you should be working in around about this figure, 20 to 30%. Your non-wage related expenditure should be no more than 25 to 30% as well, which is for paying for the likes of your telephone, ESB, stationery, your practice chart, your insurance, all of those. right? So they should be in around about the 25 to 30%. And if you're staying within these figures, then a good practice, their net profit should be around between 45 and 50% of your turnover figure, excluding VAT. I probably should have said earlier on, when you look at your trial balance, when you look at your income and expenditure, and you look at your balance sheet, which we're going to look at in a minute, all the figures that are in there are all excluding VAT. All right. So if you have a fairly well managed practice, then you should be coming in with a profit around about 50% of your turnover figure. If you come in with a profit of 50%, then you're probably going to be looking at a tax bill of around about 40% of that amount. Okay. So for example, just to clarify this, because it confuses some people, if you're a practice that is not a limited company, which the majority of practices are, and let's assume, for example, that you're showing a profit at the end of the financial year of 100,000, out of which you have taken drawings of 20,000, you are actually taxed on the 100,000, not the 20,000. You know, so it's important to understand that principle, that you're taxed on the level of your profit if you're a non-limited company entity, which the majority of practices are. And just be mindful of the fact, as I say, you know, some people go along there and they're making a profit and they're taking that profit out every single month, and then they suddenly get to the end of the financial year and they discover that they have a very big tax bill and they can't understand why they have no money to pay it. The reason they haven't is because they've spent it. So your after-tax profit should be sufficient to pay principals an industry appropriate salary and allow for future investment in the business. And you know, allowing for the future investment in the business is extremely important. What I would also say in relation to this too as well is the obtaining of a large fee income. It does not follow that you'll get a large fee income if you decide to cut fees. My advice, don't get into cutting fees. You have a very important qualification and you've spent a lot of time at education to get this qualification, and you should be charging accordingly. And those that decide to undercut fees, let them undercut, they'll not last too long. So when we talk about a figure of 175,000 for fee income for a solicitor, what are we considering? So I'm going to break this down for you. So if you consider, first of all, that your working week is on average about 40 hours, so you're 9:30 to 5:30, and you have lunch breaks out of that. So you have a billable time of 35 hours per week. You then allow for holidays, whatever, 20, 25, 30 days in a year. And you allow for bank holidays, which are approximately 10 in a year. Then somebody working Monday to Friday works on average 220 working days per year. Whether you like it or lump it, everybody is going to have downtime. And you're going to find it very difficult to get downtime anything below 25%. You might be successful down to 20, but you'll not get it much lower than that. So when you do the calculation of 7 hours per day at 220 days per year, less than 25%, that's roughly about 1,200 hours. So we're running it down to 1,155 to allow for other issues like the likes of illness and that type of thing. And if we take that a small, medium-sized practice, that the partner's time probably should be valued at about 250 euros per hour. If we take 1,155 hours by 250 euros, then we come up with an income of 288,000 plus VAT. Okay. Now, there's other issues that come in there. So for that reason, we have more or less taken a figure of 175 excluding VAT to allow for other reasons that may happen. But the main message that I'm trying to get across here is this. If you're not coming in at the level of 175,000 per year per fee earner, what you need to be doing is you need to be sitting down and you need to be putting in some sort of a time system within your practice. I use a little system called Clockify. It's spelled Clockify. It's a website, it's free, all right? And I time all my work and I can keep it for a week. And I can sit back at the end of the week and I can look and say to myself, right, what has been productive time here? What has been chargeable time and what is not? And I can guarantee you, if you do that over a period of about 3 to 4 months, you'll probably scare yourself. But this is all down to efficiency. And, you know, I'm not talking about 100% efficiency here, because as you can see from my figures, if I was talking about 100% efficiency, you should be earning 288,000 per annum as a fee earner, not 175. So this is an area I would like you to think about and concentrate on, because within a solicitor's practice, the scope to reduce expenses are very limited, because your expenses are not that much. You know, the main expenses are wages. You know, very little you can do about your telephone and your ESB or your stationery. You know, you can cut wee bits off them, but they're small when you look at them overall. Like, and this is why you need to be watching your trial balance and see how small these things are. You know, so the main thing here is time. The what you're doing with your time and making sure that you're getting paid for it. If you have fee earning employees, the same sort of principle should apply. You know, if you're taking on an employee to be a fee earner, then you should agree with that fee earner beforehand what the anticipated income for that fee earner should be on a yearly basis. And I would suggest that what you should be doing is sitting down with that fee earner on a monthly basis to review what has happened in the last month. This should only take 10 or 15 minutes, you know, and it's not something to get hung up on. This is something to be managed for the good of the business itself, because, you know, if the business is not making a profit to pay your wages and to retain a certain amount for the future, then the business is not going to survive, and that fee earner is not going to work. You know, so what I'd be looking at is whatever you're paying a fee earner, you should be looking at roughly at least 3 times that amount in their fee income, or you should be sitting down and working out the calculation that I showed you earlier on. And what we'll be doing is we'll be sending you a link to this presentation, which will be on our website. So we'll send you a link in relation to this. So if you haven't written down the figures, you'll have it in the next couple of days. Emma will be sending the stuff out to you by email. Your balance sheet, and I'm conscious that we're now at 45 minutes, but your balance sheet is a summary of your assets and liabilities. So when you look at your balance sheet, you can actually see what the assets and liabilities of the business are. I just skip on to the balance sheet itself to show that when you look at the balance sheet, this is our balance sheet. So you have a list of all your assets here at the top. You have a list of all your liabilities at the bottom. The one thing I would be concentrating on here, make sure that your assets are always more than your liabilities. If they're not, that business is going in the wrong direction. Okay. So then underneath that, then you have your profit coming forward from your previous particular period, less whatever your solicitor's drawings are. That's the way we have it in our system. Other systems could have solicitor's drawings in this part of the expenses. You know, it's just a choice issue. I prefer to see it this way. So finally, then I'm just turning around to say to people, like, you know, where do you go for help? You know, whatever you do in relation to the solicitor's accounts regulations, as I said previously, don't bury your head in the sand here. If you get into trouble or you get into a mess in relation to anything, please contact one of your colleagues. If you don't want to contact one of your colleagues, then certainly consider your accountant, although he may not be able to solve the issue for you. But then you have people like the likes of ourselves out there, and you know, we're specialists in this particular area. Like, you know, we've represented solicitors at the various different committee meetings. So, like, you know, certainly contact somebody. Whatever you do, don't bury your head in the sand, because if you do, it's very, very difficult to come out of the situation. Again, just a small advertisement in relation to ourselves. You know, we believe that service is supporting the legal profession. We have experienced legal accounting. We carry out reconciliations, VAT and payroll. We have in-house training. We have cover for maternity leave. We're experts in ensuring that SER compliance is met, and we have created our own software. And these again are just more or less kind of an advertisement to ourselves. You know, what we can provide for you. You know, it's just the various different things. You know, if you have an issue in relation to solicitors' accounts and you have nobody to turn to, certainly pick up the phone and ring me. I will not be charging you for the first consultation, so don't worry about that. Then we just have a couple of slides of what our software actually looks like itself. All right, so it's just fairly straightforward. It's, you know, one form you complete for every transaction. You know, as we like to keep it as straightforward as possible, rather than complicating it with buttons here, there, and everywhere. Like, there's no need for that at all. Law Society are very happy with our software, so whatever you do, you know, make sure that if you don't have an accounting software, consider some. And these are just a couple of reference materials if you want various different links. All right, so just